Okay, guys, welcome back. This is your boy. Let me just check if we're streaming. I just need to check whether we're streaming or not. Live. Yebo, and we're live, guys. Okay. All right. So welcome back, guys. This is your boy, Dubex, and this was a test run. So this will be the actual video. So welcome, guys. My name is Dubex Industry. In this whole thing, I'll be walking you guys through my journey to becoming a pro Forex trader. And I've been learning from ICT. Shout out to ICT, and thank you guys for tuning in. Whenever you're gonna tune in, right now I've got 0 viewers, and today is the 21st of June 2024. But we up on 1.5k subscribers. But I'm gonna be doing the streaming. Please do follow me on IG. My handle is Dubex Industry, and let's get it. So the purpose of these streams, guys, is so that I'll be backtesting the way I'm doing ICT, like in terms of the way I've understood this content and the way I'm trying to adapt and apply my own concepts into the whole thing, right? So we're gonna be using this platform called Traders Casa, and Traders Casa is just a nice platform that helps traders like me who can't afford paid software subscriptions, and we can get free purchases. I mean, like a free version which allows us to backtest. So the session name here, I'll call it USDJPY backtest. USDJPY backtesting. So the reason why I'm backtesting USDJPY is because I realized that it's one of the most volatile forex pairs like in the market, right? And if you check here, if you just say most traded currency pairs, right? You realize that GBP USD where is no, that's not what I wanted. Wanted by volume. Pairs by volume. Okay, yeah. So most traded currency pairs. So there you go. USDJPY is on number 2, right? Because if you look at the volume metrics, you'd actually realize that USDJPY is actually traded. So if we look at this thing, this pair, you can see that the most traded pair is by volume, it's the Euro USD, followed by the USD JPY, then GBP USD, AUD USD, and then USD CAD. I usually trade USD CAD and CHF, but then I'm slowly like trying to come into AUD USD, GBP USD. I've been trading this one, but I haven't been trading this one because I just had a stereotype to it. But then this one I always get clapped. Euro USD would like punish me like all the time. So, but I feel like now I'm ready to like grab that bull by the horn. So we'll be looking at USD JPY. So right over here we'll be backtesting, and let's backtest the month of 2017, and then starting balance. So what I'm gonna do is I'm gonna simulate me having a 60k challenge. And 60k challenge is 60,000, or let me say 20,000. I'm going to simulate having a starting balance of 20,000. So that's similar to any prop firm account you can get there. Then the pay is USDJPY. Then start date. Let's go over and take 2020, and then let's go in August. And then let's take a date. Let's take the 4th of August. And then description is just ICT backtesting. Right. And there we go. We created our item. Here it is. So then let's trade it. So shout out to any of you guys watching this video now, if ever you are gonna watch this. Yeah, but humble beginnings. We all have to start from somewhere, right? So, right, this is the chart. I start on a 15-minute time frame. I have a set of rules that I follow. Usually, ICT in the core content. I think month one, he said that you should get a good view of your data, right? Like zoom out. If you're in the 15 minutes time frame, get at least 3 days of data, 3 to 4 days of data. So you can see we've got this date, this date, this. So date we've got 1, 2, 3, 4, 5 days. Now this is a good interpretation of how the current market structure is right now, right? If you look at it like that. But then if you're gonna be looking at it from a cramped up view, where you're actually not giving yourself time to look at data and you like focused on this part, right? Can you see how misdirected you'll be if ever you're looking at the charts like this, right? This is a false representation, because right now you could be thinking we're in an uptrend, but then could actually be descending. So yeah, so this trader's casa. So this is the button you use to play. So right now we want to go into the daily time frame, but then I start off in the weekly time frame. Then I reset my chart, and then in the weekly time frame I'd like at least 9. A daily is 9 months. Weekly, I forgot how much weekly is, so let me just check that one. But so I've got this notebook where I keep my stuff together. ICT month one, right here. He says that what you should be focused on right now is that 4 hour daily. Okay, so the weekly time frame he didn't give a case, but then since the daily is 12 months, no less than 9 months view, I'll take it that the weekly could be thrice as that, so like 3 years of data at least. So we go over back to this one. So we'd want at least 3 years of data. So we've got 1 year, 26, we have 2015, 2016, 2017, 2018, 2019, and then in 2020. So zooming out a little bit, and yeah, so there's our price action. I'm pretty sure I was supposed to see that end. Let me just try and zoom, refresh it. So possibly it might show. Sometimes it glitches this thing. I really don't know why, but then that's how it behaves sometimes. But it's okay. So we just want at least to have that weekly perspective, whether we are in a proper monthly uptrend or weekly downtrend, and then we're gonna do top-down analysis. So whilst we're waiting for these charts to pull up, my risk parameters is that I risk 14% of the daily loss. So if I'm targeting to work with a prop firm, I pull up my calculator. My risk parameters is that for every prop firm size that I get, I risk 20%. I risk 14%, so 20,000, and then times the daily loss, which is 0.05. So in any trading day, I can't lose more than $1,000, and then I multiply that by 14%. So that's how much I'm willing to risk per trade. $140. So that's 140 divided by the total account size. That's actually 7%. 0.07%. So it's less than 1% per trade. So in a day, because I give myself enough leverage in terms of like stop losses and all that, I would expect to take at least 2 trades per day. That's risking roughly 1.4% per day. And if I take an L, we move on. So yeah, that's just generally my risk parameters there, but we'll look more into that later in other videos. I don't know why the chart isn't pulling up as yet. It's crazy, bro. Like when stuff is for free, bro, like you can't complain. Like you have to deal with shit like this sometimes. Alright, let's refresh it again. If it don't work, I'm gonna close it, and then I'm gonna try to there we go. But I hope this is 15. Okay, 15. Let's go into the daily. Now let's go into the month, weekly. All right. Let's see, is price action showing? Okay, yes, price action is not showing there. So now we reset chart view and we zoom out. Right, so clearly we can see we've got 2020, 2018, 2017, 20. So we've got so much price action. And then just from this perspective, you can clearly see the market was in a downtrend coming from this side. And now the market is in an uptrend, fair and fine. And then now the market pushed up, pushed down, pushed up, pushed down. And then now we are in a moment of retracement, And funny enough is because I have done this chart before, so I actually have a perspective on what this market is actually doing. I'll quickly run it down to you. So from 2013, you can see that we finally had a change of, because we're making lower lows, right? And then somewhere here, that's when we changed character, right? And then when we changed character, we had highs here, right? We had highs here, and we had highs here, and we had highs here, and we had highs here. So generally, all those where the highs are, there's buy side liquidity that will be resting there. Like buy side liquidity. So buy side liquidity will be resting all above these points right here. So my point is, from this downtrend, when we finally started going to the uptrend, we were taking out buy side, and buy side was being taken out every single time. So with taking out buy side like that, when buy side is taken, that means that we are actually rallying up, which is why this uptrend was going up. And as the uptrend was going up, the highest point it reached was this part. Here, right? And let's confirm to the left. Did it take out buy side that was resting at the top there? No, it didn't. So we can clearly see that these are uncharted lands, right? We have never reached these highs before. So ICT says mark up the areas where price has never reached, and although price did actually take the buy sides here because it reached here. So price did take the buy sides there. So can you see from this whole stretch to the downside, we actually covered up all the buy sides that were in it, and then so this is like an all-time high. So from this whole market stretch, we've got how many legs? That we've got 1, 2, 3, 4, 5, 6, 7, 8 legs or so. But then now the reason I'll pick up my legs is that I'll take a low from here. So this low is the one that this low failed to take out buy side. That was gonna cause the change of character, fair and fine. And then it retraced back, and then it pushed to the upside. So this low is the one that caused the push to the buy side. So we're gonna mark off that low as the partial low. I call my partial low the key critical low, because that's the low that caused the change in character, or that caused the change in character, or the push to the expansion. So ICT says that you should identify areas where you have expansion, like here. He says resist the edge to focus price movements right now, but not where price shows a quick movement from a specific level, and not recent highs and recent lows that haven't been retested, and not areas on the charts where prices left clean highs or clean lows, right? So some of those parts are these ones. This is where the charts have left a clean high and a clean low, because there's a clean low, right? And where's the clean high? The clean high is right up here. The clean high is right up here, right? Okay, so those are key areas, right? Now in this price action, right, my fib is just marking 0, 0.5 and 2. That's level 2. So this is 50% level, right? Did the market retrace back into 50% level? No, it didn't. So what I'm saying is the market didn't give the buyers enough chance to come and retrace. So when the market went up, it's supposed to come down to 50% so that the market can push up again. But then when the market rallies up and doesn't offer a fair price again and keeps rallying up, at some point in time, it must accommodate by rallying down to 50% and at least rebooking price fairly. So what I would say is that this push to the upside was not fair, in the sense that when the market started rolling up, it didn't give us a fair value to a rebook price, because it should have at least come down to 50%, but it didn't, and instead it just kept shooting for the stars, you know. So that's my point. So I would say this leg is the one that actually caused the fair value. This leg is the one that's actually fair. So my point is, from this leg here, from this leg that we have, the market then took to this high. Did it retrace back to 50%? No. Then it actually consolidated, then pushed to this high. Did it come back to 50%? No. Then pushed to this high. Did it come back? No. Made a further high, and then there we go. And then now this is a shoulder, so I'll take it back to the head, and then now check. So this is how the market has portrayed itself. So then I'll mark off the 50% level, the dashed line right there. So that's our 50% level, and then dash that line, dash it. All right, so now I can delete this whole thing, but before I delete it, you can see like, okay, this is the price action. So in the long run, we expected price to retrace back into here and then shoot to the upside. So what price has to do is price has to come back here. And what does this mean? This means that US dollar is actually gaining value. We are bullish on the US dollar, and then we're shorting the Canadian dollar. So now, if this low is supposed to be protected because it's the low that's supposed to take us to these highs, then this low is actually a key low, because can you see from the retracement down, price shot back up, and I'll talk about that just in a minute. So that's a low right there. It's a key low that I'm gonna be considering, and then take it back to a line. And where's the high? That's important. The high is up there. So right, so I won't deal too much about the price action that has happened in here, but for now just know that this is a swing low and this is a swing high, right? So I'll just label it just in case some of you guys don't like listening. Swing high, a swing low, right? And then the swing high will be this one. So this is a swing low, then know that this will be the swing high, right? I'll just label it for you guys. Swing high. Right. So those are our two cases, and then right now the market is in this region, where I'm saying if the market is now in this region, right, we're expecting this to be like, this is all now consolidation, right? Because either price has to come and take out buy side that's resting above the, or market has to come and take out sell side that's resting here. So the market has either two options: either come, take out buy side resting here and push to the downside, or come and take out sell side that's resting here. So the only reason why the market would come and take out sell side is because in this range that we have, right, we also have a 50% level. Mark up that 50% level, and then I'll label this so because we have the fib here, because we have the fib here, it can properly show us the colors. So we've got the let me change the colors. Maybe I could make it blue, but I think it's visible, right? So anyway, in the red section or pink section, I'm actually saying that's premium, right? So yeah, so this is premium, right? And then so let me change the color to red. Red is premium, and then what else we have? We have discount right here. So this is discount, and then we color it black, right? So that's my whole point, my thesis now. So like in this price action now, we wanna be buying in discount because we still believe the market should rally up higher and attack to the buy side, you know, and we believe this low is gonna hold. If it's not gonna hold, well, violating this law, although it did seem like it did violate this law, but then we've got a higher swing, this whole price action. So this is why any violation of these laws will be invalid. It will be just better positions to be going long. Like anyway, if you buy here, it's a better position to buy long. If you buy here, it's a better position to buy long because you'll be in a deeper discount, right? So my point is, in this region now, we want to be buying anyway in this region, right? So further investigation into that is us coming into this region, and then we identify where the market has been reacting to. You see these 1-2 touches. What is it reacting to? It's reacting to this order block here, right? So price is reacting to this order block, and also price did react to this order block right here. You see? So if we take this one and pen it out like that, we've got this region, right? So you can see price re-expected it 1-2 times, the third time, and then the fourth time it failed. So that's another thing I've noticed, like in Forex, like numbers do matter. Like first time, good, take it. Third time, good, take it. Third time, yeah, it's a bit risky, but you could still take it. But then like the fourth time, yeah, something bad could happen there. So then that one then pushed, and it pushed all the way into the initial order block right there. And then that's where we have it, and then price took a buy, and then we rallied up. So this is where the market is currently at. I don't think the market will trade lower than this. And in my perspective, I'll look at this as a head and shoulder and inverse head and shoulder, where I would comfortably say this is a shoulder and this is the head, and this is now the shoulder, like this. And I push the upside, something like this, right? So keep that in mind. So I'll delete that. So I'll be comfortable in buying in this region right here. So now what I can do is now try to get more price action in this region in terms of how market is actually rallying down. What I want to see is a change of character that's indicating prices now pushing to the upside, and then now I can be a buyer. So my perspective is to be a buyer in this region, and when we finally blow up these highs, then we're gonna make more money. So like let me show you why I think going long is an advantage in this market right now. You see here we made this swing high, so we've got buy side resting here, right? We've got buy side resting here, and here with sell side and then sell side. But then when the market rallied down, right, it actually did change in character, then came down, then it started taking all the sell side that was resting here, took all sell side resting here. Yeah, it took sell side, came down, it took sell side again, that's resting here, came down, and it also took this major sell side here, because this sell side was very key, took it and stalled people out. And then now look what happened. As the market was rallying down, right, what was it creating as well? It was also creating buy side, and this is how it was creating buy side. So I'll put it to 2, and I'll change the color to red. Red is terrible. Okay, let's go with purple. In fact, let's just go with purple, right? So it was creating buy side, created buy side here, left buy side, and it left the main buy side here. The main buy side is there, and then it started creating buy side here again, like created buy side. We also created buy side there. We also created buy side there, and then finally made dust go for the turtle soup, and then shoot it, and then it started to shoot back up. And when it shoot back up, it took out all these. It took this one out, came, took this one out, came, took this one out, right? And what is left? We have 1, 2, 3, and though 1, 2 is important, but the third one is the most important because it's the one that's gonna indicate us that we are gonna be rallying higher or lower, right? So what we have is we've got these ones, and this is 2, right? And this is 1. Okay, so those are the buy sides that we have. And look, the market rallied up, and then now what's the other thing that we have to observe? Although the market sort of respected this order block that was resting here and pushed to the downside, fair enough, but now what has the market done? The market now has left sell side liquidity again resting here, this one at this point here, this buy side liquidity resting there now, and I'll call this 0. And okay, so now we've got the market has induced buy side here, so that if it nudges or taps into this buy side, it's gonna quickly tap into this one, and possibly take out the high. But then how does it have to do it? It has to accumulate long position, right? And how it's gonna accumulate long position, gonna reverse engineer, make price go lower, and then it's gonna start accumulating orders. So look what's happening as the market is rallying down, right? It's rallying down, making lower lows. But what is it doing as well? It's also making other key lows, because this is a lower low, and then we could say the lower low right here, then push back up, made a lower low. So right here, this whole thing, we can say there's buy side resting here, right? There's buy side resting there, say -1, Fed will say -2, because we also have other buy side that's slightly here, right? And that would be -1. So there's liquidity resting there. And then what did the market do? Market made a lower low here, retraced back, and ICT says, yeah, watch this. It says not recent areas and recent lows that have been retested. Where is that? It's right here at point A, B, C, and D. So I'll mark that for you so that you follow with me. So I'll just say A, and I'll say B. So the reason why I'm doing this is so that we have reference when we are actually in a trade, right? So it'll be easier for me to reference with you guys, or you guys actually explaining. Can you please explain what you mean at point A, point B? So we've got buy side at A, and then at B, retested at B, came back and retested at C. So we might expect something to happen around at D, right? And then what have I said before? If you look back in the video, I did say that look at this with 1, 2, 3, and the 4th touch penetrated in. So possibly now we have 1, 2, 3, 4 touches, or we could say with 1, 2, 3, which is A, B, C, and D. Now we've got the D that could happen, and this D could be the one that nudges there, but then finally breaks to the premium side, right? So what I'm saying in this market, right, is all this buy side that's being created here now. We've also created more buy side liquidity here and here as well, relative highs, and also here relative highs. So can you see how much buy side we have? Now we are -3, right? -4, -4, and -5, right? So that's what we have. So what I'm saying is the market has been leaving a trail of buy side orders such that if it tugs into them, it's just like a ticking bomb. It's just something that's waiting to, like propensate itself faster, like, and then quickly try to achieve what's this, the main. So these are short, intermediate, right? But the key one is 0 is a key one. If we break 0, then we possibly gonna break 1, 2, and 3, right? But then what's happening is, look, as it was making lower lows, it was taking out the sell side, pushed up, took out sell side, accumulated longs, took out sell side again, took out sell side again. So the market is actively taking out sellers, right? So that it's inducing buy stops. So now there we have it. So we're actually in this trade. So now we've got a story to tell about the markets. We've got a order block that we're working with. We've got another one that we could take a trade in, and we're hoping that price doesn't breach these lows. So now we're in the weekly time frame. Now we start marking our lows. So there's an all-time low in the weekly time frame, and we don't want that breached. So I'll put that to black. And then ICT says something about fair value, like a range or something. Talk about that if I find it. All right, I think there's a range. He says in our ranging markets, you have to find a place where there is a short-term bearish candle, right? And above its high, there should be a bullish candlestick, which is this one or this one, but the first bullish candlestick, which is this one, right? So we're saying our range is then gonna be this price action right in here. That's our range for the moment, right? So I'm gonna delete that, and that's our range. I'll find text. So this is our current that's our current weekly range. Okay, and then we have our current weekly range in there, and then now, so we've mapped out the highs, and then now what we also want to do is map up the highs and the lows of the weeks. So we've got this high, price reacted to it, shift. I'm gonna make this 1 point, and currently the low of this week is right there. And then what else can I see? Market is rallying down, right? It's on a downtrend, but what are we currently on right now? This is a low, this is a lower high, this is a lower low. So the market is actually ranging in this region right here. In this region right here, we are ranging. Change that color to orange. Right, so in this whole region, we are ranging, right? And we could also mark off a 50% level in that range again, so that we can further find out where. But we already know this is premium, like discount. But for your sakes, guys, I'll just show you what I mean by that. So in this range, would also say 50% is here. Can you see 50% is in the range? So we know that the current weekly range, anything below that is discount. So we aim to capitalize on this trade setups that okay, gonna go long in there, right? And then what else can we see? So from this current price action, we can see that we have a key buy side here, and we have a key sell side here. And what we have done is we rallied up, and we induced another buy side here, but we didn't take out this buy side. So as long as we rally down and we don't take out the sell side, we could be rallying up to take out buy side. That's resting all the way there. And then what happened to the left doesn't matter, because we took out sell side. That's what's resting there. So there's no. So this is just the only sell side point we have, and we have 1, 2, 3, 4, 5 many buy sides. So we wanna see a retracement down into this one. And what we have here is in this range, IC2 talks about we had lows, right? We have 2 double lows, double bottoms, and we pierced into it, but we retraced back, although we almost retraced into it, but then we failed. But then can you see that so far so good? There's no been change of character for this downside. We want to see a change of character to the upside, then we know that we're in. So possibly we can see something there. And now the only way we can see more information is going into the daily time frame. So, and can you see my top-down analysis approach, guys? Like it's deconstruction, right? So now here we are. This is our range that we're looking at, and we know that we're in discount already since we're in the gray area, and we've made 1-2 lows, and then we pierced through it. Now, what could this be? This could be a total soup, right? That such that price is pushing up, fails to take out this buy, and then pushes down, takes out the sell sides resting here, so that it can what? It can capitalize to take these buy sides, and buy sides, right? So let's look left. What do we have? How did price react to this? There's a mitigation block here, and we have a bearish order block here. So panning this out, say we were gonna use this bearish bullish order block as entry. Can you see we were gonna get tagged in, but just as at its entry point? So let's say that's a bit invalid. Let's try to look at, it's valid still though, but I'm saying let's look at this mitigation block here, or we could say it's still an order block. So right there, that's where we have price action. Okay, and this is daily time frame. So thing is, in the daily time frame, I now have a perspective of what has been happening in the past like 9 months. But generally, can you see like this is a head, shoulder. So I could say that we could be going long here. Now what I want to see is a change of character, right? That's the important one. So remember, we have our weekly range where this is our weekly low, weekly high, and price went up. So if we're gonna be shorting, because we would want to see like a change of character, and the change of character would only happen when we take out this buy side, right? So I'd want to see price push to the upside, get rejected somewhere around this bearish order block, and not take out these highs, so that the market sort of behaves something like this. Either we push up, fail to push down, then we take out the high. Now that's a change in character, right? And then we reach these areas, respect, retrace down, and then take them out, something like that. Or we could just have one push to the upside, then that retraces down. So whichever the case, we could be saying, but I could also still go short depending on what I see, because this is a market range. So this is the high, this is the low, this is the range. And now we can go into, so what can I see? Yeah, what I can see is that we broke these highs, but the fair value gap that's here, it's within it. The fair value gap did not break the downside. Can you see? It broke into, and then it got rejected. So I could just take note of the fair value gap that's there, but then it's not as strong as I anticipated, because it should have held close to below, so that this rejection would be absolutely valid, but still either way. So I could still anticipate. Now what have we done here? We've left buy side right there, this buy side resting there, where people might want to sell short. So let's jump into the 4-hour time frame. And I have this other theory I've been trying to retest about fair value gaps. Although this fair value gap did not push to the downside and break these lower lows, but then it went in once here, right? Sold aggressively, came back twice. This is the 3rd time, sold 4th time. I don't think it will sell off again. So it's either we're selling to the downside, but what have we left? I was leaving something very crucial here. Check, we have a fair value gap right here, right there. And this is strong, very bullish engulfing pattern. Change that to green. Shit, the colors are right. Change that to purple, whatever the color is now. So we'd expect a retracement. So because I'm saying this fair value gap got tested once, right? Because this is once, twice, and thrice. I'd say this one has been tested once, still waiting for the second time and the third time. So I would rather go long and read this is an indication that we are bullish. So now let me jump to the 4-hour time frame. Right, so in the 4-hour time frame, we can clearly see that yes, we have a change in character. We're going lower. We take out these highs. So in this price dynamic, we have got this high has been taken out. Where's the next high that has not been taken out? It's up here. Right, that's where the highs that are resting. So if price wants to take out these highs, could it push to the upside once without, then there's sort of like buy side as well right here. So price is close to these two, 1, 2, but it could actually try to take out. Okay, let's be rational about this. Price took out buy side, so it should defend this low if it wants to push higher, right? So my thought process would be we check whether we're in 50% discount, push the upside, no 50% discount, pushed higher, no 50% discount, and now we are currently here, right? So what I would expect is maybe price wants to keep pushing higher, then later discount into the fair value gap, but then I think I would still take a trade that would come back into the fair value gap right there, because now we've got 1, 2, that was the second retest, but I'm still saying we still have the third retest which I could still take. So noting this price pushed higher, and we've got this bearish order block right there. So I could take that one, put my stops below there, and hopefully it would work out. So let's pen in into the 1 hour time frame. And right now I can't put like a channel to it, but if I'm gonna forecast one from estimation, I'll tag these two highs as the extremes, 1, 2. So this is the rate of change. This is how fast the market is trying to push to the upside in the 4-hour time frame at this point. So yeah, that's my channel. I could then map it down, see whether it collects other points of interest. Okay, so I'll try to tag it to this low where there was a reaction there. Boom, there we go. And try to correct line of best fit, and there we go. And that's how I'm trying to apply stats. And then I'm just take it to the right hand side, see where it maps out perfectly. So far we've got that initial reaction, which is gonna be the first leg right there. Right, so like that. Now it looks trash and shitty, right? But that could be the trend line, but we'll adjust it because we really want to know where the second leg is gonna conform to. But yeah, we can take it like that for now. Then let's jump into the 1 hour time frame. So in the 1 hour time frame, this is where we at, this is where we at, this is where we at. Right, so about that price action again, can you see we rallied up and we're at the high here. We're at the high here. And then which low took out the high? This low took out the high. This low is the one that took out the high. This one right here. So I'd call that as a partial low. This is the low that's very important because that's where ICT says that not where price shows a quick movement from a specific level. So this specific level is going to be important to me, such that if ever market retraces back down into this region, that bearish order block would be of considerable strength. Price would not want to violate that if it wants to push to the upside. So I'm saying that in case price does retrace back to more than 50%, because can you see, yeah, no retracement to 50, no retracement to 50, and right here no retracement to 50, and we've got like a double high. So if price does not respect this, possibly it might come down and respect this area here, and there's also a fair value gap right there. So now let's try to take the first setup in here, and we have a fair value gap in here as well. Can you see this one right here? And now look, this fair value gap did break to the upside. We broke up the highs that were here, and we left the fair value gap, and we're retracing back into it. So 50% level of the fair value gap is somewhere in here, and now the market is making some lows. So I would feel like the market is inducing us in those lows where it would wanna turtle soup the lows down, but we already have the bullish order block here, and 50% of this bullish order block is actually in here, right? So I could say market could retrace back into this. We don't want to see it penetrate more than. So for a rough estimate, I'd say maybe I'll go long, where I'll put my first entry right there, but I'll put it below because I know the stops will get run out first, because we're still making lower lows. Take in those lows and induce another high just there so that we can push to the upside. And then so I'll put my entry right there, take my stop, put my stops below there. This is more like uncertain, but yeah, they would be fine. But then for just a greater perspective and peace of mind, you can see there's a low here, reaction there, so I'll put it just below that. And then where am I targeting? Yes, I would target to reach these regions where this is the high of the week, and I think this was the other parts to it. I'm forgetting. Thing is, now I'm like bombarded with, which is why I need to, oh yeah, this is the weekly range high, so this is the weekly range low and high. So yeah, so we're exactly where we want. Is it? No. Anyway, guys, what's happening here? Let me zoom out a bit. Where's the weekly range? Let me change the weekly range colors. I think I zoomed out a little too much. So I'll change the weekly range colors to different colors and improve the thickness to 3, change it to color to green so that I can see it, and the other one change it to green as well. And then this weekly high, I'll change it to purple. Right, let's go back into the 1 hour, which is why you need like different monitors to stick to one time frame, where this one is just showing you what's happening in the daily, this one in the monthly, weekly, and all that shit. So now here we are. So this is like a price forecast that we had currently. Yeah, we could map out here, but anything could happen. Now let's go into the 30-minute time frame. So in the 30 minutes, we have order block resting in here, right? And what has happened in the 30 minutes, we were rallying up, right? Making higher highs, turtle souped these niggas right here, push to the upside, right? Now we want to push to this upside. Now if we want to push to this upside, where should we come reach down? We should come reach down back into 50%. So in this push to the upside, if we achieved 50%, yes, we have achieved 50%, so we could rally down lower and possibly penetrate into this more favorable fair value gap and then push to the upside. And since we've got a trend line, and if this trend line will hold, we still need a change of character first to the upside, then we can go in. So just go into the 15-minute position, 15-minute time frame. Yeah, and that's the other thing about this free thing now, because like my charts start looking messy. The lines will be okay, but the trend lines that like have angles and shit, those ones are the ones that actually get messed up, right? So I still hope you know where we are. We've got these two swings, and we're hoping to make another swing, right? Because we took out buy side, yeah, and we took out sell side, yeah, and now we're creating more buy side. So possibly we've got like a consolidation and want to wait for an expansion, and then we capitalize, right? So let's play this. And most of the time I've been playing these charts like at 15 minutes. I never went in lower than 15 minutes so that I won't get my bias off. So I've got this short-term high, short-term low. Okay, I'll just say this is the high, this is the low. So clearly we're going for higher highs. We've taken out buy side, yeah, retracing back. So now we have our change of character now, because this was a high, low, right? Change in character, push to the downside, high and a low. Let me map that out for you. So we had this high and the low here, and then we are ranging in this section. And then now, although we were ranging down in the 15-minute time frame, we were pushing down, although like it's one move, but we're pushing down. But just by the virtue of it taking out the buy sides resting, yeah, that's a change in character. So now we wanted to pull back to the downside so that we can take a buy. So it pulling down to the downside, we would want it to push back into 50% level. So you see this bearish order block somewhere there. If it can induce further down, then I think I can go along with it, but I'll let it play out a bit, because still like we are ranging. I know that we're ranging. We're still ranging. Yeah, we're still ranging. See, we're ranging because like we've got a high and a low. We didn't take out buy side there. Boom. Yeah, because I did realize that's a high and a low, right? Like regardless of the thing being perceived by the 15-minute time frame, but then we're ranging in this small market segment. But now what have we done? We've induced two buy sides, 1, 2, right? So orders are accumulating there to take out this high and this high, right? Now we've taken out sell side, that's resting here, and we are coming back into the fair value gap right here. So what's crucial is that we go long there, hoping that this low will be respected. So I'll go long. Oh yeah, I had this thing already here. So what I'd wanna see is yes, I'd wanna change in character, but now because I know this is a total soup, this could be a total soup, right? We could be pushing to the downside. I'll put my entry just above that middle of the fair value gap that I had there. That was a bearish order block in the 30-minute time frame, and then I'll take open my position. Now before I open my position, where am I going out? I'm gonna take my partials above this high first, take another one above that, but ultimately I know that at least I should close above here and maybe reach to the weekly high. That's the weekly high, and this is the weekly range we're trading in. So now, yeah, let me take one position there. So the first entry would be conservative, since we haven't had a clear market direction. So what I should do is risk 30 pips, 28, that's 30 pip stop, and target 90 pips, 1, 2, 3, right? And then what else should I do? What I should do as well is but we've got this bearish order block here. Although we have a fair value gap in there, but then I feel like I should take it lower, at least there, because I can see price did react, but it will give me multiple chance. It won't just shoot back up unless there's news. 30 pip stop and check my stop. Is it a reasonable stage? Okay, so I'm gonna open a position and then I'm a risk. So I'm a risk 0.035% or 0.35% because that's how big is this account? $10,000 account. So I'm open my calculator. So since I'm being conservative on this stage, since I'm in the premium of a short-term trade, I'm gonna risk 0.0 because 0.35%. Yeah, I'm gonna risk 0.35% times account size 20,000. Then we get $70. Yeah, so that's my trade right there. Then I place. If you wanna add partials and view other benefits, you gotta pay, bro. You gotta pay. Place the trade. And boom, let's go. Now we can play it. Okay, market is reacting. We've got a short-term high here, short-term low. Will this low get violated? Kept it. So now I think this is a low. Now we can see, okay, let's enter in here. The retracement in there, and we won't reduce our stop, but then we'll just push it up and hope we can be re-entered into the trade somehow. So we'll just leave our orders there. The market will always try to come back sometimes. Oh wait, I didn't push the entry. I'm supposed to push the entry into this fair value gap here. Push the stop here as well. And then play that shit. Boom, we got tagged in. Boom, shit. Yeah, so that was a total super gain. Shit, a total on a total because look, it didn't take out the high. I didn't notice that. Check. When the market took out this, right, and was trying to reach for the buy side, it didn't take out. So what did it, what when it started to retrace down, I thought it was gonna push up now. But then now, why would it push up and consider there's just these few buy sides when there's buy side resting below here? Which is why this would have been still the best entry. So now I'm gonna take that L, but we tagged in. And we've got a bullish pattern here. So I think this is now the proper entry. So I'll take another entry. I'm just doing this because I know that I'm now risking the proper 0.7%. Right below the, I'm risking the proper 7% right there. Open, place trade. Right, now I've got 0.7% on the line. So I've got $140 on the line plus $70 on the line. In a single trade, there's 210 out of the whole 20,000. That's times 100. I'll be losing 1.05% of the account today. Not bad. So let's play the ship. Okay, got tagged out on my shorter term trade, that's 0.35. Now this is something that I'd also like to incorporate. We've got a descending channel right here. I haven't been using channels, but downtrend, got a descending channel right here. Right, fair enough. If it pushes to the upside, that's indication that we're going long. And now look at all this buy side, that's there. Boom. Check, nudges our trend line and comes back. So this is a good indication that this trend line is valid. So I think I would then try to capitalize my other percentage I lost and place the trade by placing another trade here. Open, place, right, and then let's play. Got tagged out in our bigger trade, still in the smaller one now. We have lost a couple of bucks, but let's pause it and check whether we have, okay, we've total souped these orders right here. So let's jump into the 30 minutes and see whether we are not seeing something. Okay, so this low got violated, pushing to the downside. So, but we are still in this fair value gap here. That bearish order block, that's a weekly bearish order block. But so far so good, no change in character. So where could price be going? Could price be trying to come back down to this level? Okay, but this is the first two, one touch. Okay, let's let this trade pan out and let's see. It's crazy, just like that. Yeah, I think the market is gonna start rolling up, so I'll jump into the 15, take another trade to push to the upside. Open, risk the same amount. Now we've got another 0.7 on the line. Tagged out. Yeah, so clearly I'm in the wrong side. Yeah, market is gonna start running down. I'd rather be a seller now at this point, so I'd rather sell these 1, 2, 3 points there. Like there, I could have sold. So we've got to arrange this one and this one right there. So right there we've got a bearish order block. I think I'll take that one, take it to the downside because it's the first time, but it's a 15-minute one. But I think, yeah, we bearish. We could be bearish. Put my stop above there. That's 20. Where's 30 pips? Boom, 30 pips. Now where's my profit target? My profit target is gonna be twice the leg. So there's an uptrend. Boom. Twice, yeah. Capitalize to take profit, yeah. Now I'm gonna go in on this trade, so I'm gonna put my risk percentage to 7.5 at 7. This is another trade. Like, these trades are happening like independent, because I'm assuming I'll be seeing this through like days, sitting it through days and whatnot. So play that shit. Does it take me in? Looks like it don't want to take me in. But it will take me in, don't worry. So I can see buy sides are accumulating there. Rather put my entry back on top there, because it's gonna take buy sides there. No reason to make it a double top entry. And I think that's something I'm learning to learn to move far away from double tops as far as possible. So I'd rather move into this bearish bullish order block there. It hasn't taken out the lows yet, so we're gonna probably induce those ones. Now we're almost tagging them out. Boom. Didn't get tagged in. Okay, that's where I was supposed to get in, but it's okay. So assuming I'm in the trade. Okay, I'm not in the trade by balance, but the thing is in the trade though. Could we take out buy side there? Made a lower low. Market is ranging and it takes me in. But that's like a boom, shit. Yeah. Alright, so I think the market has me where it wanted me. The market had me where it wanted me, where it clearly showed me that it has changed direction, but I couldn't see it because I was being knocked out. I've got this range, yeah. Discount region. Expansion. Now it's possibly going for the buy side now. So it's taking out this buy side. I think that was crucial to realize. Taking out this buy side. Coming back to give price fair value here. And I've got this order block here. Yeah. So in the end, what can we say? Let's look back into this. Let's reflect, right? What was this purple thing? And what was this? I knew this trade was risky because it's too close and it's 50% of this. The 50% was this thing, right? So my trade setups were supposed to be in here, right? And not based off this. So if I knew that we were going to retrace back down to 50, wherever we were, I would try to sell off to catch into it, then buy. So I think that's the lesson. Yeah, don't try to buy stuff that's already in premium, because I started trying to buy the market in and it was already in premium. Let me show you, it was already in premium. Yeah, that's why I was getting stopped out. I was buying expensive. Check. This is premium. I was buying here. Tried buying here. Tried buying here. Tried buying here. Failed. Got rallied down. But in 50%, I could have bought. So yeah, guys, I think that's the biggest lesson we can learn from here, is that don't buy premium. Don't never buy price that's in premium. Buy in discount. Always. So we'd rather wait for this market to retrace down so that we can buy. Because anytime we try to buy, we're buying in premium, and we don't know how long it can last, because it's now that it's in premium, people are trying to sell it off as well. So yeah. So I think let's call it, and we'll come back and trade this, continue, and hopefully we'll remember this. Yeah. So let's go back to the daily. And if we go back in the daily, bro, you can clearly see, I had said this a long time ago. I did realize that we had a fair value gap here. I still remember I said we have a daily fair value gap here. This one. And price just nudged into it and shot back up. So if I could have just put my entry in there, put my stops below, I'll be fair and fine. I'll be happy. I'll be happy. Right? But I tried to buy this one. Yes, it did come back. Yeah, but I got clapped. But yeah, it's one of those guys, one of those. And now the market is riding up, almost taking out those highs, riding up again. So yeah, we learn, we live, we laugh. And that's it. So thank you guys for tuning in. Please do subscribe to my YouTube channel. And let's get it. Cheers, guys. Also follow me on Instagram. And yeah, if you have any contributions you'd wanna share with the channel, please let me know, and enjoy.